Input tax credit, soul of GST, expectation versus reality. And to deliver this address, I would like to now invite C. Atul Kumar Gupta, a renowned GST expert, to deliver the session, please.
A very good afternoon, ladies and gentlemen. Since we have only the 18 minutes available and we have to start the session at 3 o'clock, the next session. So I will try to complete my presentation as compared to the 30 minutes in maybe the 20 to 25 minutes. At the outset, on behalf of our team who organizes this entire event, the Taxo and the Oak Bridge, we convey our sincere thanks to all of you that you all participated in such a large number. We have received a large number of nominations as well as our friends joined from the different part of the country, including even we have one colleague who specially came from Jaipur to attend this program, and this program is live telecasted as well to the subscribers as also. Friends, as we are discussing the GST, the various aspects related to the GST since morning, and now in the post-lunch session, we have the three important events. One that I will be speaking, and then we will be having a panel discussion on the various litigative aspect of the GST. And finally, we will be having with us the Honorable and very respected Lakshmi Kumaranji, who will be delivering the final keynote address to summarize the entire aspect related to GST, and then there will be the final wrap-up. Friends, as far as the ITC is concerned, the input tax credit, and we all are discussing in the various panel session also, there are the great challenges as far as the input tax credit is concerned. And whenever I am talking about the input tax credit, I used to say that it's the soul, because if you are aware about the input tax credit, practically the 50% of the GST you are aware of. And that's why we should be giving the more and more time, the emphasis and the learning towards the input tax credit. Friends, I will take you, because since this program is about the 5 years of GST, I will just touch upon maybe through a presentation for 2 minutes the 5 years journey, and then I will take you to the certain challenges. And as usual, that I have a practice, I have a habit that whenever I am giving any program, I used to ask certain questions. So here also I have a case study for all of you. So you have to be very attentive, because I will test each one of you that okay, how much you have gained in the last 5 years. So there will be an exam as well during this 20-25 minute session. So you have to be always on the alert side. Friends, as we are aware that the GST is a big game changer, and it subsumes more than many of the central and state taxes, and we now have the only, so earlier what was there, that the entire activities were classified being something, somebody is saying that it's manufacturing, not a manufacturing, job work, then works contract, then trading, then service. But today now we have only the one nomenclature called as supply. And the supply is being divided into the three parts, that is the intrastate, interstate, and then export and import, and so on, so on. So based on that preamble, how the GST is a game changer. So as you are aware that when it was started on the 1st of July, so there were the transitional provisions. So in case you have certain credits available in your books of accounts or in your returns, you can pass on the same to your new regime through the trans one, and that becomes the GST. And then you have the purchase and the sale. So this diagram will try to capture the entire 5 years that how today where we are in the regime of GST. So you have the credit in the return of excise, service tax and VAT. Certainly it will be transferred to the credit on the 30th of June 2017. It was, though there were challenges in relation to the trans one, even if you will go to the cause list, you will find the hundreds of judgments are pending for the decision related to the trans one, even in this present scenario. Then there were certain credits in the books which was there in the old regime but not claimed in the return. So there was a procedure to claim the same as well. And then finally, neither in the books nor in the returns, but since you have the invoices available, so you can claim the credit of the same. So in totality, it becomes the opening credit for the purpose of GST when it was introduced on the 1st of July 2017. So my dear friend, we carry forward the same, and then now in the present regime, what is happening, that you have a purchase during the month. Now whenever you have purchased during the month, what is happening, in case it is an interstate purchase, you are paying the IGST, and then you can claim the credit of the same. Certainly they have given a formula that how you can claim. First you will use this, and then second and third, and so on. In case you are doing an intrastate purchase, you are paying the CGST plus SGST. In case you are importing, you are paying the custom duty plus the IGST. So earlier it was CVD and special additional duty, but now that is being merged into the IGST. So you are paying the IGST. And finally, in case you are getting certain invoice from the head office, so you are getting a input service distributor registration, and then the credit is getting transferred from the head office to the branches and vice versa. Now my dear friends, based on that, there will be the total credit you will have in your hand, the IGST, CGST and SGST. And finally, you will be doing certain supply. So there will be the supply, you will be removing the goods, you will be doing advance received, or there will be an interstate branch transfer. So all these activities are being classified as a supply, and based on that, you have to charge and pay the GST. Now, in case when I am saying the supply, there are certain very, very important provisions which are applicable on this supply, and that is the something that we should learn. First one is about the valuation, that what will be the right valuation, what will be the right value of your supply, because you will have out-of-pocket expenses, you will have certain discounts, rebates, and then like for example, you are exchanging the old printer with a new printer, you are supplying to your agent on a subsidized price, you are supplying to your branch on a specified price. So how you will be able to value that? So that is something the rule section 15 with which the rules are there, which explain us the valuation rules. And then we have the place of supply, because it's very important. Normally we are aware that when the recipient location is the place of supply, but there are certain exceptions. For example, the immovable property, for example, the scientific and technical services, and so on. So then you have to understand that which will be where will be the place of supply. So based on that, you will be charging the IGST or the CGST. My dear friends, so finally, when the supply is there, there will be the three dimension of the supply. Either it will be an interstate taxable supply, as I discussed with you, and it will be subject to the IGST. And the moment you have the output liability of the IGST, you will be eligible to claim the credit. So credit, you are aware, is the magenta color. So the credit, it will flow to meet out your output liability of the IGST. In case it is a intrastate supply, then it will be the CGST plus SGST, and again this credit will flow. You can see in the diagram, the credit is flowing. And finally, the third leg, that is the export and import. So in case it is export, it is a zero rated, and zero rated means there will be no GST, and you can claim the refund from the department for the whatever the input tax credit available with you. So my dear friend, this is the ecosystem, this is the bird's eye view of the entire ITC mechanism, which is there before you, which gives the 360-degree view of the entire how the input tax credit system mechanism works. Now my dear friend, as you are aware that we are here to discuss the various expectations versus reality, that okay, what are the benefits, what is the we can take a stock of the last 5 years, and then we have to develop a way forward, the road ahead. And in this entire session, the entire day is being devoted for the taking stock and developing a way forward. So I just wish to take you on the next slide, is which talks about the benefits of the GST. So as you are aware that the first benefit, which we discussed in the panel discussion as well, the removal of the cascading effect, the tax on tax is not there. So earlier we were subsuming the excise duty, and then we are charging the VAT or the service tax, as the case may be. But today we have no cascading effect per se, that you are not charging the tax on tax. Then there is no forms. Earlier there was a big fight on the availability of the C forms or issuing the F forms, and then the D forms, and then chasing the department to get the forms, because you are looking for a concessional rate of supplies. So today, if you are doing a branch transfer and the branch is eligible to claim the 100% credit, so there is no forms required. Still you can do it per your own will. The valuation can be there. Then, my dear friends, the reduction in the cost of production. Obviously, when you have a less cascading effect, you are not subsuming the tax. Yes, there are the cases when you are subsuming the number of, we discussed in the deliberations that in case you are providing a leasing services and you are getting constructed your building, then you are not getting any credit. So that increase your cost of production. Similarly, there are n number of situations, for example, the petroleum sector, for example, the construction, for example, the railway, for example, the power sector. Everybody is consuming, is subsuming the cost, subsuming the tax portion into the cost, and that increase our ultimately the cost of production. But nevertheless, 90%, maybe the value of this 10% is more than the 30 or 40%, but otherwise in the 90% of sectors there is a reduction in the cost of production, though the anti-profiteering authority is still searching that okay, whether the profit is being passed on to the really to the consumer or not. But nevertheless, the situation is that there is a reduction in the cost of production. The export competitiveness, which is resembles with the cost of production, because actually if there is a reduction in the cost of production, certainly you will be able to compete at the global market, because your price will go down and you will be able to compete that okay, what will be the new price which we will be charging from the importer. Then there is a smooth flow of credit in chain, like a branch transfer, as I mentioned you, that there is no F form required, and you can always transfer the stock from one location to another location, and the branch you will charge, and the branch will ultimately collect from the government, collect from the consumer, and then can claim the credit of the same. And finally, as I mentioned you in the panel discussion, there is no need to pay the entry tax, octroi, and the state taxes which were there in the earlier regime. So I can give out 4 more benefits like this, but just to summarize you, because of the limited time available, that these are the primarily 6 benefits which we can witness in the ITC mechanism. There are n number of benefits of the GST, but as far as the ITC is concerned, I see these are the 6 important benefits which we are getting because of the implementation of the GST in our country. Now, my dear friends, I will move further, and now I will talk about the certain challenges vis-a-vis the conditions, that okay, if you want to claim the credit, what are the various provisions governing the ITC per se. So my dear friend, I used to say that these are the few mantras, so 7 mantras, 8 mantras, that okay, in case you want to claim the credit. So I believe that my colleagues from the industry will certainly take note of these points, that okay, what are the 7-8 points checklists are there which you should be taking care whenever the credit you are looking for. Number 1, that the credit should be related to your business. I am talking about the eligibility part, the section 16, which talks about that the non-business credit will not be available. So either the credit should be used or intended to be used for in course or furtherance of business, meaning thereby the credit should be related to your business, then only it is available to you. Similarly, the valid documentation, it's very, very important, because normally what we are looking, that we are feeling that if the credit is available in 2A or 2B, it is available to me. My dear friend, the 2A, 2B is only a facilitation process. It's not the case that okay, it's law. Ultimately the law is that you should have a valid document available. So Sanjeev ji, in case even if the credit is available in 2A, but you don't have the invoice available in your hand, you are not eligible to claim the credit, because you don't have a valid documentation available, which is given in the section 16 of the CGST Act. Likewise, the goods and services received, you are aware about this entire fake invoice, the litigation which is going around with this particular point only, because the law says that the recipient, the receiver should have received the goods or services. And how you will check? As I mentioned you in my panel discussion, that you should have the stock register. Very importantly, that you should have the stock register to prove that the goods or services have been received by the assessee. 4th one, the supplier paid the GST. Now it's tricky, because as I mentioned you, that you have to cross the road and there should not be any accident, with the condition that you will not be open the eye. So you have to follow that, you have to ensure that the supplier has paid the tax, but I will not give you any mechanism to check whether he has paid the tax or not. So maximum what you can do, you can see the 3B or the GSTR 1 of the SSC, but whether he actually paid the tax or not is something that you have to assume. And based on that, in my assessment, there is more than 2% credit loss of every company. Minimum 2% credit loss is there in every company, when you will find that ultimately the credit is not getting reflected in 2A or the supplier is not paying the tax. So if you calculate the 2% vis-a-vis the 1,50,000 crore which we are collecting, so you can assume that at least a 3,000 crore loss is there on a month-to-month basis to the government, to the industry on a basis. So how to check, as I mentioned you, so it's that how to check, there is no answer to this question. Then you have to file the GSTR 3B, because at times you will find that you have the input credit available in 2A or 2B as the case may be, but if you are not filing your GSTR 3B, that is only a provisional credit. The credit will become your credit, it will accrue you only and only when you will find the GSTR 3B, otherwise it is only a provisional credit, it's not yours. So you can't say, I have the output liability similar to my credit, so there will not be any interest liability. Unless and until you will not file the GSTR 3B, the credit is a provisional credit and liability will stand. Now, my dear friend, coming to the next one, the capital goods removed in the last 5 years. So it's a fixed asset register item. So that's why I mentioned that we should have a fixed asset register always in our hand, because in case there is a removal of the fixed asset within the 5 years after claiming the credit, you have to reverse a portion of the same, for which the section 18(6) provides us the formula that the transaction value or the 5% minus for each quarter, whichever is higher, is something that you have to comply with. So it's very, very important that in case you want to claim the credit or avail the credit or retain the credit, so that's the condition you have to follow. And finally, the last one is about the proportionate credit, rule 42 and 43. In case you are dealing in the taxable and the exempted, I'm speaking very fast. Speed is okay? So because of the time paucity, I'm just rushing a bit. So the rule 42 and 43, that ultimately if you want to claim the credit, you are dealing in a taxable and exempted goods or exempted services, exempted supply, then you have to follow the rule 42 and 43. For the 42 is for the goods, the input tax credit related to goods and services, and for the 43 it's for the capital goods. As I mentioned you, the capital goods, it's like a business that okay, you have to claim the entire credit and then reverse at the rate of 18%. So practically I am giving you the loan and I will be charging you the 18% interest. So the maximum interest which I can charge from you is something that the schema is having. Now, my dear friend, I have also noted down certain challenges. So I request each one of you that when you are complying with the ITC, I request the attention of my all colleagues here, there as well, because I will be asking certain questions. So it's my habit that whosoever is in the hall is doing some chit chat or some other things. So I used to take note of that, and specifically जैसे संजय जी को मैं question पूछने वाला हूँ, sir, संजय जी, what will be the answer? So I request all of you to give me the attention. Otherwise, but I will not be able to send you the things which I wish to send you. So आपका eye contact रहेगा, तो I will be able to communicate that through the eye contact and send you the into your brain something about the things. So friends, there are the challenges which I wish to share with you, and that is something that every person should keep note of that. Number one, that you have to pay within 180 days. So it's very, very important that unless and until you are not paying within 180 days, you will not be able to retain the credit. The next one is the block credit. So now there is a process which is going on to streamline this block credit in the CBIC as well. But just to share with you, right now the position is that the credit related to motor vehicles, rent a cab, outdoor catering, food and beverages, works contract, construction, and so is not available. Very importantly, as akin to the Rule 9BB of the Senate Credit Rules 2004, we have this section 17.5, which talks about that in case you miss something to pay, and now you are paying, but the department has invoked the section 74 or 129 or 130. 74 means, say for example, you have to pay under reverse charge mechanism, you forget to pay. Now after 5 years, if you wish to pay and claim the credit, it will not be available because the department has invoked the section 74. Likewise, 129 is a e-way bill, 130 is a storage purpose. My dear friend, then you have to claim the credit within the time limit as well, that okay, before the end of the 30th of November for all the invoices pertaining to the last year. So it's a problem, because if you will claim and you will not pay for 2 years or 1 year, say for example you have the agreement like this, that okay, I will pay after 2 years, then you will have a dilemma whether I should claim and reverse, because I will be able to reclaim because I am not going to pay within 180 days, and if you forget, the credit will gone. So it's very important that we have to take note of the section 16 subsection 4. Then the electronic credit ledger can't be transferred from one state to another. So cash ledger, recently they've introduced a schema, but the electronic credit ledger, so if the Sanjay ji have the output liability in one state and the credit is available in another state. Sorry, you can't transfer. So you have to bear the cash flow, you have to bear the working capital interest liability, because you will pay from your own pocket in one state, and whereas at the same time you have the asset available in the other state which you can't use. So that is something very importantly business challenge is there. Inverted duty structure, you are aware that in case of an inverted duty structure you have to claim the credit of the so earlier it was only for the goods, now they have given that proportionate amount of these services as well. So input service as well you will be able to claim the credit, but not exactly the full amount. So they have given the formula, but the inverted duty structure always have a challenge of availability of the refund of the ITC which is available to the assessee. And then the credit note within the specified period, it's a big hurdle. Why I'm saying so? Because say for example you have an agreement that the after sale service will be available for 3 years, and if there is any deficiency in services, say after 1 year, but the credit note issuance period is over, so you will not be able to do so. So that's a point that okay, it's not a business friendly environment when you will be able to issue the credit note even after a certain period. So that's an important point that everybody has to take note of this, that okay, in case you want to take the benefit of the CN credit note, then you have to issue within the prescribed period. And then finally there are 2 more points. One is the asset essential for eligible for credit, like building for renting. I explained you earlier, so I will not be touching upon that. Even if the asset is used for rendering the services, providing the supply, still you are not eligible to claim the credit, is something that a block credit we are aware. And then the input taxable, output exempted scenario. So you have to, as I mentioned you, that you have to follow the formula, that how you will be able to calculate this credit and so and so. Now my dear friend, this is from my side practically for this 15 minutes. I completed the presentation, and now there is a test, because this 5 year is over, and you are aware that I just give you the background of the test, that in the 5 years we are aware that whenever there is a taxable and the exempted supply, whenever, I welcome Rohini Agarwal ji, madam, thank you very much for joining us. So whenever there is a portion of a taxable vis-a-vis exempted supply, you are eligible to claim the credit. So for example, let us take an example that we have with us, say example, Sanjeev ji is sitting here. He is having a turnover of rupees 1 crore, 70 lakh is taxable, 30 lakh is exempted. Okay, how much, in which ratio he will claim the credit? 70 by 100, 70% credit you will be eligible to claim. So it was so simple, because I shared you that out of 1 crore 70 lakh is taxable, 30 lakh is exempted. Okay, now there will be the different scenario, that when you will have the 5-6 type of turnover, and then you have to calculate the ratio to arrive a formula, arrive a ratio in which you will claim the credit. Okay, so now since 5 years you are dealing with the GST, let me take a test that okay, the 5 years of GST, that how much you have learned in this last 5 years. So this is a question before all of you. Mr. X is having a turnover of this value I have given. So there are the 7 different type of transactions are there. Supply attracting 18% is a nil rated, 0 rated, exempted, sale of stock, purchase of stock, advocate service. So he is also an advocate. So 2 crore of advocate service is also provided. So you have to tell me the ratio. Sanjeev ji, now it was, earlier it was so easy. Now you have to tell me. Or Sanjay ji, we have your 2 colleagues sitting on the back side. So I am looking the answer from them. So please tell me, sir. You are, sir, from Jaipur, sir. You tell me, sir. FIRC. You have to tell me the ratio.
हाँ सर, 9? नहीं सर, ऐसे नहीं सर, ये तो इन्विजिलेटर से पूछने वाला हो गया, एक एक लाइन पूछ के। एग्जाम ऐसे नहीं होता सर, आपको आंसर देना है। यू हैव टू गिव मी द फाइनल आंसर। यू कैलकुलेट विद इन योर सेल्फ वट आई यू विल ट्रीट। Just I'm telling you, the second one is a nil rated. आंसर आपका गलत है, फिर भी आप रेशो बता सकते थे। आई एम लुकिंग फॉर द रेशो। ट्वेल्व इज टू टू, 1:2। नहीं साहब, रॉन्ग आंसर है। नहीं, 10:7 नहीं होगा, 10:17 होगा, है ना। सॉरी सर, रॉन्ग आंसर। 10:7 में तो क्या हुआ कि जितना यू विल बी गेटिंग द मोर द क्रेडिट, सो इट विल बी हाउ इट कैन बी 130% क्रेडिट कैन नॉट बी ना। टेन बाय 17 इज अ रॉन्ग आंसर। चेक करते हैं सर। प्रोवाइडेड लिखा है सर, ये सारी मेरी आउटपुट लायबिलिटी है, ये सब कुछ आउटपुट है। सर वी आर नॉट रीडिंग द कोड ऑफ एथिक्स चैप्टर हेयर। नहीं साहब, ये कोड ऑफ एथिक्स का चैप्टर नहीं पढ़ रहे हैं इधर। आप क्वेश्चन का आंसर दीजिए, ये बाईपास रूट मत बनाइए सर, ये आउट ऑफ सिलेबस है। ये तो हमें पढ़ाया नहीं है, आउट ऑफ सिलेबस। हाँ जी, एनी अदर गेस? हाँ, 19? 9:17 is the wrong answer. Wrong answer. Wrong answer. जी, I believe that we have very less time, so let me start. So friends, पहली 4 आइटम तो बड़ी आसान थी, everybody should be 10 and 9, 10 by 19. Wrong answer sir, wrong answer sir. नहीं सर, मैंने अभी कब मैंने कहा 10 by 19 रॉन्ग आंसर। 10 भी गलत है सर, और 19 भी गलत है। Should I sir? So we received one right answer. Let me here, you should also check whether you have taken the right analogy, the assumptions or not. Sir, first one, taxable? No challenge? 8 by 17 is the wrong answer, ma'am. So the first one is taxable, we have no doubt. Second one is what the principle says, that if you are not eligible to claim the credit, the supply will be treated as exempted supply. So the nil rated, you are not eligible to claim the credit. So nil rated means, so nil rated and 0 rated are different. So nil rated, you are not eligible to claim the credit, meaning thereby that will be treated as exempted. I mentioned you, I given you the idea as well. The third one, 0 rated means exports, and export will be always treated as a taxable supply. So no question, you are eligible to claim the refund, means you are eligible to claim the credit. The fourth one, the supply exempted is again not a problem at all, because you will certainly say exempted. The problem is there in the 5th, 6th and 7th. Okay, sir? And I am happy to intimate you that this provision is not a new provision in the GST regime. It was there in the service tax also from the last 18 years. So since 2004, the similar provision is there, that how you will treat when you have the sale and purchase of stocks and securities vis-a-vis the advocate services, when the tax has to be paid under the reverse charge. Anoop ji mentioned that when, as a advocate, sir, you are mentioning that in case of advocate, if you are providing a 2 crore of rupees services wherein the entire tax has to be paid by the recipient, in that case I am not eligible to claim any input tax credit. Okay? I am not allowed to claim any input tax credit, say for example renting, security guard, telephone, meaning thereby for this activity, for me, it will be treated as an exempted supply, though it is a taxable supply. But for the purpose of this calculation of the formula of a taxable vis-a-vis exempted, it will be treated as an exempted supply. And finally, the 198 business. The 198 business as given under this section 17 subsection 3. So I request you to please read, everybody, the law very carefully. But the law says that in case of a transaction in security, the 1% of the sale value will be treated as exempted supply. And for advocate, above that, outward supply on which recipient is liable to pay the tax is under reverse charge, is also fall under the definition of a exempted supply. So what will happen? The 5 crore taxable, 2 crore exempted, 3 crore taxable, 5 crore exempted, 1% of the 100 crore will be exempted and 2 crore will be exempted. So the taxable turnover will be 8 crore and exempted turnover will be 10 crore. The ratio will be 8 by 18, which is there before each one of you. So my dear friend, this was all from my side. Thank you very much again for joining us in such a large number, and all these eminent speakers and the panelists for sparing their valuable time to join us in this wonderful 5 years of GST unlocking the India potential. Thank you very much.